Hello, guys. Hello, guys. How are you? A new day has begun. A new week has begun, that is, within the trading. And yeah, again, the day opened up extremely negative, but we did see some buying, coming into the end of the day here. I think that could be seen on the SPY, the SPY chart, that you can see you had a dump, you hit a support, and then you bounced up again, still a little bit early, but yeah, let's dive into just the SPY for this time around, and then we will do the Twitter recap. I did post a lot of stuff today, actually, and yeah, let's see how it is. Let's see how it is. So, what I said here is that you can see we actually, dropped here initially, and then we rallied back there into this whole resistance stuff here. Um, what you can see here also is this gap here has now 100% been filled. Let's see how it evolves, during the week here. A lot of pressure still. Breakdown here from these two lows, retesting now, needs to get back above for any further potential upside. But you can see here, if and when we lose that blue trend line, going back to October 2023, then it opens up a whole, you know, a lot more downside, really. But we shall see. We did find some buyers. We did find some buyers in Bitcoin as well. It dipped below that 91K all the way down to like 89, and find some buyers, and it's only down 1% today. So let's check the Twitter stuff, guys. Again, I did post a lot of stuff today. A lot of soft commodities, in my opinion, looks good. I think we are in for the building pressure of the second wave of inflation, or third, depending on how you count it. But I will probably say the second is the most correct one. And yeah, of course, again, you won't feel the inflation tomorrow, but 18 months, 12 months down the road here, I think we will feel the pressure from these charts when they are fully, baked into the whole calculation. So this was what I meant by Bitcoin here, dipping below the neckline there at roughly 91, 92K here, dip below, it did found some buyers here at the US Open, and now we're actually coming quite far back. So the wake up line for me, and to nullify this whole thing here, this topping pattern, is to take the head shoulder out at some point in time. So the ideal scenario is we're going to rally, we tag third time, pull back, and then we break. That will be your entry, by the way. So roughly it will happen at roughly 98K or so, close to 100. Again, this is potash by rock bottom entries, and the fertilizer index is exploding off its cycle low. So I agree, this really looks like it wants to make a big bottom here. You can see the lows here, lower low, lower low, and then you start to see higher lows. So what typically you can see here also the head, excuse me, the ceiling here at roughly, I don't know exactly where it is, but 1100-ish, and this could be a mega bottom here for the the Nasdaq US benchmark fertilizer index. So give it a little bit more time. I think there will be some great opportunities in there. Uh, Massive bottom here for like 18 months or so. Beautiful. This is a Kevin North Star. So he says here, does anyone remember what oil did in the 1970s? So asking for a friend here. So again, oil is also a chart that I've been following quite a lot lately. Um, the reason is, and he's pointing it out quite well, even though I would have preferred these two to be the wick lows. But anyway, the picture is the exact same. So wick high here, tagged it there, tagged it here again after the madness there in 2020. Tag, tiny pullback, breakout, consolidating above here, or in a pennant above, you can say, where you're having the breakout high, testing many multiple times, and it seems like we're about to break here really, really soon. So we have broken anyways, excuse me, we have broken the downtrend here, and this wedge pattern is breaking out from. So still a bit early, in my opinion. Again, we still are in early progress of breaking out, so give it some time. But definitely, again, if you're going to see crude oil, up, close to 100, let's say when the end of year, again, that is a lot of inflation that is going to kick in the calculations, a year out. If you are now at roughly 80, and you're starting to trade at 100, consistently. That is a lot of inflation, energy inflation. So this is bullish or bearish. So this is the inverse S&P 500 chart of the SPY. Again, you can see it here. We just looked at it at the beginning of the video. We closed low. Again, this is inverted, and then we rallied during the day. In this case, the inverse of it, but it definitely looks like, a downtrend, sideways action, and then we're probably going to break to the upside. In this case, breaking down, right? You have to remember it's inverted. That was actually a very famous phrase. It's inverted. I think it's the Top Gun. So again, this is just me fooling around here. If Twitter sentiment is correct, the uranium trade has to be at the lows, right? So again, it's basically uranium right now is totally dead when it comes to Twitter. Yeah, it's not looking good. And yeah, it's not, you won't get the exact date, but I'm guessing there should be some upside coming really soon. Again, depending purely on this. Uranium charts here with UUU, that is the energy fuels. Again, this guy is really honest. So again, if you want honest charts, I think he's a really cool guy to go to. Gap fill and tap of lower demand zone. So what he's saying here is, again, this is this the 45 minutes? Yeah, it is. So initially, the open during the day here, bam, we tag the zone there, filled the gap, snap straight back, nice volume, and we shall see how it evolves. But definitely you could make it a count there. Again, I'm not a big Elliott wave, expert, but I could see this as a 1 to 5 correction. And in my opinion, we need to clear these two trend line, the trend line that tags the two here, in order for us to go higher. So again, I didn't see how it closed during the day here. So, but yeah, energy fuels. And here comes a ton of my charts, by the way. So sit down and again, if you haven't seen them, you can read them on Twitter. So USD WGI, that is the breakout that Kevin showed in the previous chart. And again, this is a breakout of a 4-year wedge pattern. So there it is, which recently broke, a roughly 15-year breakout here. It's actually 17, but anyways. So this, again, when you have these breakouts and you flag or have a bullish, pattern sitting on top and you're breaking out, that's usually a really good sign. So oil, hey there. Nat gas here. Stage 2 uptrend is still fully intact. Entry was given there at $3. Again, I have the target at $6. The head and shoulders is actually 7, but again, between 6 and 7 is my target for this pattern alone. It might go higher, but again, that is where I think we will hit some big resistances. And we did retrace a lot during the day here, but it's still fully intact. I don't see anything negative in the gas at the moment here. TLT, that is the 20-year, Treasury bond ETF. Bonds are still eroding, so you can just see here, 20 years up slowly, and then 4 years down extremely quickly. So you're actually seeing the selling being roughly, 5-6 times faster than the uptrend. And I've read somewhere that that when you have a crash, it happens 7 times as fast as when we are grinding to the upside. So I do expect, again, I am seeing some sort of potential weird bottom here in the making, extremely skewed. But again, we have to wait and see if that is the case. But I'm expecting to see some sort of bounce here at the lows. The size of the bounce, we shall definitely wait and see. Similar here with crude oil. Again, that is the 2008 highs, 14, and then you're breaking out wedge pattern, peaking out here. So oil is definitely showing us that we might have a mega move here for oil. And yeah, if that is the case, energy and precious metals, they go hand in hand very often. INQ, the perfect entry for me, again, will it happen? I have no idea. But again, if we are gonna come all the way down to roughly here, roughly 15, basically tagging that trend line here, the golden one, I'm a buyer. Right now we've come really far from like 5 to like 80 or 70. And again, retracing a bit here over the next quarter, maybe 2, it could, be a re-entry at that point in time. But we shall see. It has definitely peaked there for now. After that, pennant peaked above the purple parallel, and then we collapsed, boom, straight down. So it has a lot of work to do, and we shall see how it happens, how it evolves. Heating oil, again, this is a German ETF. I misspelled that one. Cool. It's OD7L or excuse me. So heating oil, heating up with the bullish pennant here. So again, the lows of 2020, massive rally. Pennant, again, the odds are that we're going to break to the upside. Also note here, we have this whole trend line coming down here, right? So you have the highs there, you connect it here to here, breaking out, retesting, boom, right? So again, oil has a really good vibe as we speak, and we are also somewhat well above the 77 on the USD WTI. USD in Swiss franc, the currency pair, again, I'm expecting this is one hell of a move, by the way, going from like 0.84 all the way to roughly 0.92. That is a massive move. I'm expecting a pushback here. Eventually, that neckline could break, but I would be extremely surprised if we're going to cut straight through it. Actually, I wouldn't mind if you're having such a long run here and you're breaking out. That is very often a false breakout. So again, for me personally, the way I have been, I want this to actually peak above and then crash down. But I'm expecting this move to come to an end really, really soon and have a pullback. Gold divided by Bitcoin here. Again, it seems like it is bottoming here. I would love to look at the chart now because Bitcoin has, gained a lot of the losses back. But still, this is a head and shoulders breaking out retesting. So for now, this is actually a very good sign of a local bottom where gold could be outperforming Bitcoin over the next, at least the next months or so, I will say. The QQQ here, again, this was pre-market. Again, I think it closed close to zero. Can we look at that? At 0. Okay, it closed actually at 505. So closing basically right here. The highs from July, you can see it there, breaking out, doing a lot of testing, gap filling over here, finally breaking, testing it now. So the uptrend here seems to has been broken. It's still holding on. We're still somewhat flagging into that support. So it's anyone's guess, in my opinion. It's just the bears and the bulls are fighting so hard right now. So gold divided by the NDX, long time frame, 10 years. In my opinion, we have this downtrend line coming here. In order to have gold really, really do some amazing things, even though 2024 was really good for gold, we have to break this white line here across the highs from there, the downtrend at roughly 0.14. Then we have a 10-year downtrend broken, a bottom here at the end, and we should be in a scenario where gold over the next 1, 2, 3 years, again 4 years, again it depends on how the chart is evolving, but we could have a decent period here where gold will do better than the Nasdaq. Again, it doesn't mean that gold will go up, it just means that it has a high likelihood of outperforming. So gold could go down and the Nasdaq even more, so you're still having a gold going up in the ratio. Again, this was just me here. If gold drops big during the US session, we're in for a lot of pain. And that was just my thoughts where everything was just so heavily in the red. And very often do you get a lot of oil selling into the US Open and an hour before. So that was just my thoughts at that point in time. And again, if you want a lot of uranium charts here, hit the like button. 500 might have been a tad too high. Should have went with 250, which was um, my first initial thoughts there. But hey, 500, do it. Here we have the US 10-year divided by the Dixie on the monthly. So my theory here or my thoughts behind it were that we have the US 10-year multiplied by the Dixie. So a high US 10-year rate is not good. And again, if you also at the same time have a high Dixie or a high dollar, then again, the markets are in distress. And the trend line here has been working for a long time. We did peak above here as we head into 2020, and then we crashed. Again, put on your silver hats and yeah. So we had a huge collapse and then we rallied, as you know, similar to the US 10-year chart. And we were actually at 20-year highs in this weird way of looking at things. The markets are in deep distress here. And yeah, um, I do think it will go higher. But before that, again, timing wise, difficult. We could make a third impulse high here. But I do think we're going to come sharp back at some point in time when we have the ever so talked about recession, and then we will snap straight back up. But yeah, the US 10-year here is almost at its 18-year highs. That's the high. Again, that is the 18-year high looking back, and it's basically back there um, almost again here. Um, the bearish view for the rates is if we peak above and then we're going to come down. I could see this as, a the last little push and then we're going to come down. But again, very early to say right now. But right now we are making substantial, higher highs and higher lows until proven otherwise. QQQ here, similar. We talked about that one. We will not use any time on that. This was, as we headed into the US Open and we just blipped below and then we came straight back up. So again, the head and shoulders is still intact. Again, you saw the previous, chart that I did on that one. That is all that I have for you, I think. Now let's do two more. Fantastic. So agriculture, again, this is a German ETF. Huge downtrend broken here. It's almost like a parallel, I would say, if you could align those two trend lines. Massive surge from 2020, flagging here, breaking out of that trend line there. A little bit of a bull flag here into some support, peak below. Agriculture, again, inflation, guys. If these charts are holding true, we're going to have very different CPI readings, in 1 year's time. This is grains. Again, look at that channel. If that breaks, you know exactly what the name of the game is. We have broken the roughly 2-3 year downtrend, and we're probably going higher for grains also. And I think my bread is already very expensive. But again, German ETF here with broad commodities. We have a 2-year range, and now we're breakout, retest, resumption. The target is still not met here on that chart. So yeah, I think the overall views here is that, it is, to me, if the charts mature, inflation, hello, welcome back. Last one here before I'll let you go is the palladium chart with a potential inverted head and shoulders here. And this is the right shoulder. We peaked here today and we actually dumped quite a bit during the US session. But if this falling wedge here resolves to the upside, I would say that we could have, the whole right shoulder be playing out. And in my opinion, that is an entry, and you have your stop below the recent one there. Again, this is down here, so I can't see the exact numbers here, but break out from that wedge, and you have your stop way below here, and you can actually target, again, the measured move from that whole bottoming pattern there. Again, I don't have the numbers right here, but it is definitely a very good risk to reward scenario. Have an amazing day, guys. Again, like and subscribe and all that. And yeah, use link INV on Twitter, YouTube, and on Substack. So have an amazing day, guys. Cheers.